Binance's perpetual futures contracts linked to traditional financial, TradFi, assets have surged in popularity, with weekly trading volume now exceeding $60.3 billion. This marks a significant shift in how investors are accessing traditional markets through crypto-based infrastructure. The growth is not just a statistical anomaly, it's a reflection of broader market dynamics and investor behavior evolving rapidly. 6 months ago, these contracts were nearly absent from the platform, but now they account for 10.3% of all perpetual futures trading on Binance. That's a dramatic increase, and it's happening across multiple asset classes. The surge in volume is driven by a growing appetite for exposure to stocks, energy, and precious metals through crypto-based derivatives. Binance has expanded its TradFi product lineup, introducing new contract types that appeal to a wider range of investors. This expansion has helped diversify the types of assets available on the platform, shifting the focus from a metals-heavy portfolio to one that increasingly includes energy and stock-linked products. In February, precious metals dominated Binance's TradFi contracts, accounting for 96% of the volume. By May, that share had dropped to 50%, while energy contracts rose to 30% and stock-linked products climbed to 21%. This shift is notable because it suggests a change in investor priorities. Energy derivatives, in particular, have seen a significant uptick. Brent crude oil futures alone accounted for 10.4% of global spot and futures volumes in their category during May. Silver contracts, which peaked in March with an 11.5% market share, have since declined. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Indicating a rotation of capital within the TradFi space. Stock-linked products have also gained traction. Circle shares, for example, reached a 9.2% market share in April. This trend shows that investors are not only looking for exposure to traditional commodities, but also to equities, using crypto infrastructure as a bridge. The average market share across Binance's 51 TradFi derivatives is now 1.3%, which is a strong indicator of diversification and competition among asset classes. Binance research has noted that this rapid expansion of TradFi products on the exchange is a sign of increased engagement from crypto investors in broader financial markets. The platform's ability to attract different types of investors by introducing new contract types has been a key driver of this growth. The data suggests that Binance is successfully positioning itself as a hybrid platform that bridges traditional and digital finance. The shift in market share is also worth monitoring. Metals, once dominant, have lost ground to energy and stocks. This could indicate a broader economic trend, such as a shift in investor sentiment toward energy markets or a growing interest in equity exposure through crypto-based derivatives. Energy's rise to 30% of the volume is particularly noteworthy, as it suggests a growing appetite for commodities like oil and gas in a crypto-native environment. The next signal to watch is whether this trend continues and which asset class will dominate next. If energy contracts maintain or increase their share, it could signal a long-term shift in investor priorities. Alternatively, if stocks continue to gain ground, it could reflect a broader move toward equity exposure in the crypto space. The average market share of 1.3% suggests that competition is heating up, and investors may be rotating capital more frequently as new products emerge. The broader implications of this growth are significant. Binance's TradFi contracts are not just a niche product, they're becoming a major part of the exchange's ecosystem. This could lead to increased competition in the TradFi derivatives space as other exchanges attempt to replicate Binance's success. It also raises questions about the role of crypto exchanges in traditional finance and whether this hybrid model will become the norm. The data also highlights the importance of product diversity, Binance's ability to introduce new. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Contract types has been a key factor in attracting different types of investors. As more products become available, the platform may see continued growth in TradFi trading volume. However, the current pace of growth may not be sustainable indefinitely, and investors should watch for signs of stabilization or a new market driver. In summary, Binance's TradFi contracts have seen explosive growth, with weekly volume now surpassing $60.3 billion. This growth is driven by a combination of expanding product offerings, investor demand for traditional asset exposure, and a shift in market priorities from metals to energy and stocks. The next signal to watch is whether energy or stocks will dominate the volume share in the coming months, and how this trend reflects broader market dynamics.